Ellison of Hudson Valley Bookkeeping, and today I'm going to teach you how to correctly start a brand new QuickBooks desktop file if you're a landlord.
Okay, this is the critical step. So this is really pay attention to this part. It's this industry part. There's one called rental. This is the one you want, because there's another one called property management or home association, and there's one real estate brokerage or developer. But if you're a landlord, you really want rental. Okay. So I used to choose some of the other ones, but really rental is the better one. And you can see it's going to give you these are the accounts it's going to give you. So late fee income, utilities, taxes, property, repairs. It's really more rental income. Whereas real estate broker is going to have commission income, commissions paid. And property management, they don't even give you income on that one. So rental is the key. So you're going to say, okay, because it's now going to give you that chart of accounts. We'll say single member LLC. Okay, so now here you are. You have a brand new QuickBooks file. Here are the couple things I would do. I have plenty of setup videos, but this is mostly about getting that chart of accounts correctly by choosing rental. The next thing I would do is go into preferences. I always turn off this beep thing. But the main thing we want to do is go over to accounting. And we're going to use account numbers. If you are putting more than one property or you want to track each unit, you'll want to choose class tracking. I'm not going to go into that in this video. This is more of just how to download, how to install, how to start the file. Okay. So now in a lot of my videos, I talk about the fact that your chart of accounts is the most important thing you do. So here we go. Rental income is right here. And then you have advertising, okay, certain things. The one thing I would change though is your property taxes. I would change, and I would make these, so let's just start here. Cost of goods sold, or like we're trying to figure out your gross profit. So taxes on your rental unit are not an overhead, as like if I'm paying property taxes on an office building, it would be a little different in the fact that these taxes are helping you operate and it's part of your gross profit. So I would change that. And your insurance, again, a lot of these single member, owned properties, oops. Like your main expense is your insurance, your taxes, and your utilities, your repairs and maintenance. Anything else like gas for your car, going to Staples, doing your marketing, those things are overhead. But remember, you're running this property to make money. This is the sole source of the income is the rental income. Take away the taxes, take away the utilities, take away the insurance, take away general repairs. Then you come to your net. Then from there, you take away your auto, your, any of that overhead, or as we call like general and administrative. So like your telephone, travel. But these things I want up at the top. Why am I keep hitting the 4? Think that's okay. Let's look. Yeah. Okay. So we've got property taxes, insurance, utilities, and then I would do repairs and maintenance. Anything else that's not, no, too many zeros. So I'll show you what that looks like. Okay. So now look, income should always be in the 4s. You have cost of goods, which we're going to put all of these are still expenses, but this way it's, it'll help you. And I'll go throw in a couple deposits in here so you could see what it would look like. The one other thing I would say when you're setting up your chart of accounts is your rental income. First of all, I would change this and just make it the blanket rental income. Okay, now I'm going to show you right now, what if you have more than one property or one unit in an LLC, you need to make a sub account for each one of these. So we're going to say income. And I'll just do 2 so you get the gist. I just go by 5s. You do not break out expenses in your chart of accounts. That's where you would do that thing called class. So let me just show, might as well just go show you that. I'm not going to prompt. Okay, so then I'm going to go list, class list. I'm going to show you why this matters. If you've seen, I have some other videos, whether you're using QuickBooks Desktop or QuickBooks Online. If you're running more than a couple of units or like 2 properties inside one QuickBooks, you most certainly need classes and you have to pay whatever they're charging to get it. Don't try and Excel your way out of it. Okay. All right. So now we have rental income, we have taxes, we have insurance. So you might pay taxes for 2 different units, or maybe they're actually 2 different actual addresses or 2 different buildings and they're living inside one LLC. Okay. So now you have a very simple chart of accounts for your property. The other things you're going to need to do, which our company helps with, is setting up, like the purchase, or how much did you buy it for and how much is your loan and things like that. So you're going to have your fixed asset, which would be your property. So we're going to go here, fixed asset. I think that's how many numbers I'm using. Right? So 123 Main Street is now your fixed asset. Now let's say you have a loan. You're gonna go to loan. That should be in the 2s. Let's say it's at Bank of America. M&T, that fits. Okay. All right, so I'm not going to post those. That's like a whole different thing. All right, so right now, just to throw it on the bank, what we'll do is I'll just show you how you do this. So like, let's say you bought it beginning of the month. And let's say that the loan is $1 million. Then you would pick your M&T loan. Watch what this does. You're gonna have $1 million in fixed asset, and then you have $1 million liability. Now, what if now this is the way you're supposed to do it, guys. If you are gonna put your own money into a property, you first take your personal money and you go put it at the bank. You put too many zeros in here. Don't pay it out of your personal account. That's why you should always have an LLC ready to go. Okay. So let's say, let's be the day before the closing, you made sure you had and you deposited 500,000. Okay. That'll go to your members' equity. Right. And then you bought the property. We'll just call it seller. So you wrote the check to at closing. We're not going to post a closing statement right now. And we put 450,000 of our own money on there. And it's to And we've got $50,000 left in the bank for your operating expenses. Okay, what did that do? Okay, so you bought your property. Let's say you got $1 million in a loan and you put in 450,000, paid out, and then now you have 50,000 here. See how your members' equity is 500? The right way to always do this, please, do not write checks at closing from your personal bank account. You have to do the step. Don't skip a step. You need that money to leave your personal bank account, go into your LLC, and from there, your LLC will buy the property. Don't pierce your corporate veil. That's the whole point of why you're getting the LLC in the first place. Okay? Not a lawyer, but that's just my own opinion on this. Speak to your lawyer, but you really should be. What's the point of creating the bank account, creating the LLC if you're going to go do all of these things outside of it? The whole point is to keep it contained inside the LLC and keep it so you're not personally liable. Okay. So now here we go. We've seen what happens there. Now I will just quickly go into, I'm not going to go into how to invoice a tenant and how to receive payments. I have plenty of those. But I will quickly show you why I like the classes and having different multiple incomes. Okay, so now let's say today we got rent, right? So we made 2 different rents. We have unit A and we have unit B. Rents are going way up, right? Now we have A and we have B. Okay. So you'll see what this does later. Now I only break out my rental income. I never make up lots of expense codes per unit. We always use a class on that, but still you want to break out your class here. Okay. And I was just training someone recently and they had gone through all of this invoicing and the tenant and receiving the payment and making the deposits. If you have a property manager that's handling that for you, or if you, like most of you, all have your Excel spreadsheets and you know who owes you, then just post the deposit just by the unit. You don't need to track it that way. Okay. Now let's write a couple checks. Okay. So let's say you got to buy insurance. It's a vendor, $250 for this month. Now remember, I put it up at the top. Maybe this one is for A. Maybe your other unit. Now see, these are both going to insurance, but one's for unit B. I mean, we don't work in QuickBooks Desktop at our company anymore because it's just easier to do virtual services. But I love QuickBooks Desktop. So you usually, have to write individual checks for. Okay, so that's enough, just so you can get the gist. See, this is why you want to use the rental one. See, it already has a section for your tenant security deposits held and everything like that. Remember, if you're going to give money, put it to members' equity. If you're going to take money, take it to members' draw. So now we go profit and loss by class. Where'd it go? Okay. So why do you do this? You do not need to use classes or break out rental codes more if you only have one property inside the unit. Like let's say it's one big thing, but a lot of times even one property inside of one LLC could have multiple units, like an office building or a strip mall or a warehouse are good ones. So that's why I want to always see for every single unit that you collect rent on, I need you to make yourself an income code, sub of your main rental. Then you would make, especially in desktop, there's no extra charge for the classes. QuickBooks Online now they've moved it up into like the pro version. But here you can see, look, unit A right now is losing money, right? Unit B made 75 bucks. This is why you need to know this. One of my clients all the time is constantly looking at, is he making enough money to have the stress of being a landlord be worth it? So that's something you should be constantly looking at. And this classing by unit will help. Now, let me just say one other thing. What are you going to do about your gas that you're charging, or the office supplies, or you had to go buy printer paper? You're going to call that G&A. That's simple. It's just general and administrative, or you could call it overhead, whatever. Okay. So let's say now we had to go to Sunoco. Maybe it's under auto. Don't make a million subcodes. Like, do you really need to do, I mean, you're not a huge company. You do not need to make tolls, auto, like every little piece of that. It's your car. If you're not keeping it under control, you already know that. There's no point in making a million chart of accounts. Okay, and then we'll say staples. Okay, so now let's run this profit and loss by class again. Now you see how much money you're spending in other things. And at this point, this little LLC has lost $13.68. So you're going to have your general administrative, that's your expenses. And then here, and if we had made something, let me just do one more just to, and by the way, I don't believe LLC owners should be taking any meals. You're not going to take your tenant out for lunch. So just saying. Let's say you had to get a website. We're gonna call it advertising. Now look what it did. See this piece? It says unclassified. There you go. Now you really should go and click into that. Click in again. Oh, guys, I screwed something up. I made these in the 5s, but I still included them here. So let me go fix this. Because the whole point of what I was trying to show you is we renamed these in the 5s. Let me just slow down. Sometimes I go too fast. You can always get to chart of accounts 2 ways. You can go to your home screen. If you lose your home screen, click here. Click chart of accounts. So I made them in the 5s because I don't want these to be in the expense. So I'm clicking this, then you right click it, edit. We're going to change this up here and we're going to call it cost of goods. Insurance, these are the ones I changed into the 5s and forgot to change their account type. So we see you don't want them to say expense. And I will export this and give this as a download. So now we have this. See right over here, cost of goods, cost of goods, cost of goods. Okay, your bank service charges, overhead, depreciation. That's just a phantom thing. We're not going to worry about that. Telephone, travel, fine. Okay, now let's look at this. Profit and loss by class. Okay, this is what I meant to do. Overhead, of course, you're not going to have any gross profit. That's all loss, right? Now, here's A. Take away that, you're losing $12.50. It's kind of simple on this one because we only had a couple things, but this is how I want that. I want your taxes, your insurance, your repairs and maintenance to be over here. Now, because we made G&A, this separates this. But so actually it's not better in the profit and loss by class. It's like your regular one. So let's go back up here. If you ran a regular profit and loss, there we go. Okay. So here's your rental. And the issue here, guys, why this looks so bad, right, is your property taxes are really, they're like a hit. But on a cash basis, LLC, you're only going to capture the expense in the months that they're paid. Like in New York here, we pay our property taxes for our town and county in January. And then in September, we pay our school. So those are like big hits for January and September. You could show you're running a loss. So keep that in mind. But here, no matter what, and I only just did a couple entries. You can see right now, you're already at a loss. And then you went and spent money on some other things, which bumped your loss even more. So what I want you to really look at is what is happening kind of on a month over month basis. So let me just do one. No, I'm not going to go any further. But this is how I would set up your chart of accounts. So you see your income by unit or property, whether, whatever, make sure you class them so you can segregate it. And then all of your these are the cost of keeping this property and getting this income. You need to figure out your gross profit before any of your overhead. I just had something pop into my brain and now I can't remember why. Oh, I know. One other thing. The other reason I like by class. Now, we're going to go and I'm going to show you both. What if you had unit A was really like its own building and it was really like across the street from unit B and you decided you're going to sell unit A. Like it's a loser for you. You got to get it off your books. Well, if you're going to show financials to a prospective seller, they don't need to know about your overhead and they don't need to know about unit B, right? So what you're going to do is go over here and filter. I'm going to pick class and we're going to pick unit B. Voila. This allows you to show a report only on one single property, which is why I love classes so much. Okay, guys, I hope you enjoyed this quick crash course in starting a QuickBooks desktop file. Please be sure to send any video requests to hello@HV Bookkeeping, and I will try and make one. All right, have a great day.